Yo, what's up everyone? My name is Andrew Warren, and in today's video, we're going to be talking about Tesla stock and maybe a little bit around Apple stock as well, because as you can see from my portfolio, I now have 5 times more shares of Tesla and 4 times more shares of Apple. And that is because we recently had a stock split for both Apple and Tesla stock. And ironically, these are the only stocks that I own in my portfolio that I've bought with my own money. This third one right here is just a free stock. So both of these stocks have split on the same day. And so I first noticed it this morning. The Robinhood charts were a little bit out of whack. Like for example, if you look at the all-time right now, I'm up 89.27% and it's saying it's red. And even before this, the chart was way worse. It was actually like a flat line at one point, and it just keeps going back and forth between like the charts being messed up. But eventually I think it'll be fixed on Monday. It's already looking a lot better than what it looked like when I first noticed it. So at least the chart is accurate, even though it's red. But if we look at for today, as you can see, the charts are messed up here as well with like the percentage lost and the percentage gained. It's saying I'm down 79% and up 383%. And it's especially out of whack just because of the fact that all of my major positions have had a stock split. But as always, if y'all do enjoy these Tesla videos and me just sharing my thoughts and opinions about the stock market, please make sure to smash that like button. But as I've said in previous videos, Tesla stock and Apple stock will both be trading on a split adjusted basis on Monday. So there is a lot of excitement around Monday just because people are finally going to be able to buy both Tesla and Apple stock at a smaller share price, which of course nothing about the valuation has really changed for Apple except the fact that it has grown a little bit over these past few days after the announcement of the split. The same applies for Tesla as well. Nothing has fundamentally changed about the value of investors' positions. The only thing that has really changed is the number of shares that you now own and the share price itself. So if you own Tesla, like I said, it was a 5-for-1 stock split, meaning for every 1 share you owned before the split, you would get 4 additional shares. And for Apple, it was a 4-for-1 split, meaning every share of Apple that you owned before the split, you would get 3 more. So it's actually really exciting to see this because even as an investor that has been able to get in on both Tesla and Apple before the split, even as someone that has already been buying these stocks previously and especially up before the split, this looks even more attractive for me. And I know that it doesn't make a difference. It's just a difference in share price. Now there's more shares available. I understand that, but just in terms of me generally looking at the share price and looking at what it costs to buy Apple right now and what it costs to buy Tesla, it looks a lot more attractive, even though I understand that nothing has fundamentally changed about this company. So just imagine for those investors that have not been able to get in on Apple stock or Tesla stock, and they are finally able to do so because of the lower share price on Monday. And so think about what they're thinking psychologically. It's just human nature for us to look at these share prices right now and say, whoa, that's a lot cheaper than what I've seen Apple at previously. And although we understand what a stock split does and what it means, we still look at these stocks and their values and think, wow, these stocks actually look pretty attractive at this price tag, even though we understand that there are now more shares because of the split. It still looks a lot more attractive, especially if you've been tracking these stocks for a long time like Tesla. If you remember when Tesla was back at $443 or in that $400 price tag range, it kind of gives you almost like a nostalgia of thinking back on that. And it kind of gives you like a good reminder where it almost seems attractive to buy Tesla, even disregarding the fact that it was most recently at like a $2,200 share price and now it is split. So even though the share price is down, Tesla is technically more expensive than it was way back a few months ago. And even though we understand that, this share price is still very attractive. And I have to even admit myself, like I said, this is a very attractive price, even though I understand everything that has happened with the split and what's going on here. It does look very attractive if you're just glancing across and looking at the values of these stocks, and you see Microsoft at $228, Amazon at $3,400, VOO at $322, Adobe at $516. It's almost as if it seems like a good deal with Tesla only being $443 per share, because like I said, we remember that time period where Tesla was in the 400, and there's 2 main situations where we've seen that, and that's when it first started skyrocketing, and then that's when the crash happened as well. And a lot of investors investors have been over these past few months looking back on that time period and thinking, why didn't I buy Tesla? Why didn't I just get in on it? Why did I not do this? And of course, hindsight is 2020, but the fact that people have kind of been regretting not buying Tesla stock at that price tag, now they're likely going to see this price tag once again, and it's going to remind them of that, and they may think, okay, whatever, you know what, I'm just going to buy into this stock. I know that it was previously at $2,200, but the share price is cheaper now. I might as well just buy into this stock. It's not that expensive. It doesn't seem that expensive, and that's kind of what some investors may be thinking, in my opinion. Now, keep in mind, some investors might not even understand what's going on with the stock split. Some people might be brand new to investing and realize that Tesla is only at $443 per share right now, and they might not understand that we just had a stock split. So there's potential buyers of shares from that side of the coin as well, in addition to the people that obviously understand that the stock split just happened, and they've always kind of put off on buying Tesla because they thought it was too expensive, and now they may be considering it. And then there's also people like myself that have been bullish on Tesla even when people were saying it's way too expensive, have bought Tesla a lot pre-stock split, and are still considering buying a lot more. And this share price for Tesla just looks visually more attractive, and it kind of has that influence where it makes me want to keep on selling things and getting money to put it on Tesla stock. And so obviously, as you can see, we are at 284.73 shares. I would love to get that up to like 300 shares at least sometime soon. Now keep in mind, that's going to take a long time because, as I said, we are at $443 per share, and that would be like 16 shares. So 16 times $400, that's a lot of money. But like I said, I honestly think both of these stocks, both Tesla and Apple, are a buy. Now obviously there is some bias here because these are my two main stocks. This is what my net worth relies on. So yes, there is some bias, but when I actually think about it, it's not really about the bias. It's about me having faith in these companies and believing in them because of the research that I've done over these companies on especially these past few months. I have a lot of faith in them long term, and I think they're great quality companies. Tesla is rapidly expanding and scaling their business right now. Apple is doing the same thing as well, even though they're like one of the largest companies in the world, and they also have near $200 billion in a pile of cash on the sidelines. So if anything goes wrong economically, Apple is going to be one of the last people to actually struggle just because they have so much cash on the sidelines to keep them afloat. And then, like I said, Tesla is in a stage of rapid expansion right now. There's really no bad things in sight for Tesla. Of course, you can have your typical things going wrong, but it's a lot more upside to Tesla right now than there are bad. So when I say that Tesla and Apple is a buy, I think it's not really the bias. I think it's just because I've done my research, and I think these are excellent choices for people that actually want to grow their money and invest in a growth stock to, like I said, grow their money in the long term. And honestly, just addressing the Tesla stock split and the Apple stock split, I'm kind of interested to see if companies like Amazon choose to do a stock split, and maybe even Adobe as well. And I feel like Amazon would really benefit from a stock split, but only time will tell how this actually turns out. We're really going to see what happens on Monday, if people actually are attracted to these new share prices, if it really does make a difference for investors. And if we see huge green days on Tesla and Apple on Monday, then that's going to tell us right then and there that the stock split made a huge difference. We've seen all of the hype and growth beforehand prior to the split, but what really matters here is if this split actually had an effect on these investors that didn't have access previously. If these investors are actually buying in on Tesla stock now that they do have access, and that's what really matters. So I think a lot of companies like Amazon and others are considering a split right now, but I think they'll also take a look at what happens to Tesla and Apple after the split. And if it turns out well, which I think it will, then I think they'll likely consider a split. Honestly, I don't see why Jeff Bezos and his company don't want to do a split right now. They've already accomplished like the highest share price at this point in time or whatever, so they might as well do a split and get a lot of those retail investors in on it, because of course Amazon is a great company, but the main thing holding them back is people that want to get in on it don't have access to fractional shares, or they just don't have enough money to pay that $3,400. That's like a whole paycheck to a lot of people. But just addressing my personal opinion and what I think could happen with this stock split on Monday, honestly, I think it's going to be huge green days for both Apple and Tesla. And even right now, with people talking about the split, I'm even seeing investors that already own Apple and Tesla that are actually thinking about buying more Tesla and Apple after the split. Because like I said, these share prices are even looking attractive to investors that have owned Tesla pre-split and understand that it was just at $2,200. So not only could we see like an influx of new investors that never had access previously, but I also think we'll likely see old investors that already own the stocks buying more of it as well. And then there's also going to be people riding the hype wave if we have a huge green day, where there will likely be some sort of panic buying if the stocks start growing tremendously, and that continues throughout the day. But so far, regardless of what happens Monday, this is a win-win in terms of a stock split. There's way more upside than there is downside when it comes to the idea of a stock split. Honestly, I don't really see a downside on the topic of a stock split. If it's actually a high-quality, long-term company, it's a win-win for them to choose to do a stock split. So it would honestly be crazy not to do it at this point, because as we've seen so far, it's had a hugely positive effect on both Tesla and Apple stock. But anyways, with this video, I just wanted to notify everybody that the share price has already been adjusted and the stocks have split. I was actually expecting to see this on Monday, considering the fact that yesterday and after hours, I never did see any changes in the share price, like a split or anything like that. So I thought, okay, I guess we're just going to see this on Monday or in the pre-market on Monday. So it was actually surprising to see this being changed on early morning Saturday. So just addressing the current shares that I own for Tesla, as I said earlier, 284.729, and the average cost right now is about half of what we have Tesla at right now, which is $269. And then next up, we have Apple stock, the only other position in my portfolio. It's really crazy to see average cost at $71.49. I love the fact that they did adjust the numbers, though. Obviously, it's like a mandatory thing, but it's really helpful to see that the numbers haven't been all messed up and things like that. So it's kind of cool to see the average cost on Apple to be $71.49. And I think over time, we will once again see another big run up for both Apple and Tesla. But as you can see, I currently own 168 shares. So anyways, I just wanted to share this video with you all. If you enjoyed it, please make sure to smash that like button. And also, feel free to check out Robinhood and Webull in the description below. If you use my referral link, then you'll get some free stocks, and especially with Webull right now, if you use my referral link and deposit $100 into your account, you'll get 2 free stocks valued up to $1,400. And just a little secret, you can actually take that $100 right back out, so it's really at no expense to you. So it's free stocks, free passive income. But hope you all enjoyed this video, and I hope you have a fantastic rest of your week.